weekly wheat report today is 8th of September, 7:04 in the morning. Market is obviously closed. We're looking at the November contract 2018. We've got the yearly chart in front of us with monthly candles. We can clearly see here we're getting a red candle here as we get into September. Had one in here in August, and we had this stellar move up in July. Cast your eye back over here, the two previous highs here, 2011, 2007, and you can see that we touched in the similar vein here and then fell back. We closed on Friday night 174.60. Moving averages are all pointing up, so long-term trend is still in place, but as you look on here you can see we had got quite extended. Stochastics on the longer term are giving us a sell signal now. Let's go down into this lower time frame and see what we can see. Firstly, I put this out on Twitter during the week about the various phases of the market, and if you can see back here in July we had this sort of panic, euphorium, public greed, delusion situation, and if you overlay this phases over the chart here, which someone had already done on Twitter and I'd sort of looked at the same time, you can see that this fits very nicely, this pattern, similar to what we can see here. This is the November chart. I'm putting my mouse over at the moment. You can see that we've had this kind of return to normal bull trap. Are we in this fear or capitulation phase of the market? Now we've broken through this level 180. You can see on this chart we had a gap down below the level. We identified these whole numbers as key to the market, and then obviously we return to the mean. Now I'm always very keen on looking at the 60-day SMA as an indicator, and I think what we've come back down now is to find the mean, and I would hopefully say the mean would be around the 60 SMA at 174.60. But the way the market's going, it's very negative at the moment. We could go down even to test the low here of 170. Let's go down onto our normal chart and have a look. Before we come away from that, I just overlay the May chart 2019. We will be switching that shortly, so I'd like to keep an eye on that. We had a couple of gaps on the way up here. This was sort of 180 here. You can see how the market came down and tested it. We've now filled that gap and we came back down to fill the bottom here. We've left a gap up here on the way down of 185, so we need to keep an eye on that. But the same again, we are testing the 60 SMA on the May contract. In fact, we've now had 2 days below it. So let's have a look on the daily here. I just cast mouse can't get my muzzled mouse over this chart here. I'm moving it around at the moment. You can see that we had a high of 197. 10% would be 178, and 20% fall would be 158, which we could easily see, and the market still could keep within the uptrend on the long-term basis. Let's have a look, see what we can put on here at the moment. We've got a swing low here, 176, so we wanted to see that hold. That has broken here. We've closed below that. We've certainly broken well below the 180 now. I would call that we've broken through that. Will we find support down here at 170? We could have a bounce off it. These two candles indicate a bit of support here. We've had another really negative 5 days here. Last week I was indicating that as we're above the 10 SMA, I was looking for a possible bounce back up to 190. That was quickly reversed last week, and it just kept on going down and down. At the moment, you can't buck a short-term trend. Yes, we are oversold, as you can see on the stochastic moving mouse at the bottom here. But you know, you've got to go what the market's showing us, and we've broken this swing low. We've broken below the 10% level, which I want to see hold 178, and we've broken below 180. So yeah, if it wants to, it can keep going down. We'd look for a test of 170, but bear in mind on the longer term chart, we've still got this lovely trend in place. But you know, we have moved up an awful long way, and we could retrace quite a bit and still be within the trend. And I'll put an update this time next week. Thank you.